Welcome to another episode of Beyond the Trade. And today we are going to talk about mastering the art of entries, the management, and the exits. So it is going to be one more exciting talk, what we are going to have. And joining us on this show, as usual, are our two very special guests, Mr. Divakar and Mr. Arun. So Divakar sir and Arun, welcome to the show. And we can start with a small, what you can say, a welcome message from both of you for the audience.
So thank you, Kiran, and it's a pleasure to be on the show once again. And yes, this platform definitely is going to be giving the opportunity for sharing what we are doing. If in turn going to help the viewers, what else we want. So meanwhile, my background is I was into IT services for almost 15, 20 years and then turned into a full-time trader. And apart from that, recently, I'm also into YouTube channel where I'm posting my live trading sessions. So that's also become a hobby kind of thing. And yeah, that's what I'm.
Very, very nice, sir. I think you're doing a great service for people who want to learn it. And I really wish that, the YouTube, whatever live you conduct, has the impact what it is intended to have. So thank you so much for doing this for all of us.
Thank you.
Thank you. Yeah, Arun, from your side, your welcome message to the audience.
Thank you, Kiran, for inviting us. And so my message is simple, ki matlab, the way you are conducting and we are going into the depths. So it will be very helpful to all the newbie traders as well as to understand the intricacies of the market. So there are a lot of the things which we see matlab, only on the surface, but the depth of the market and what we go and discuss, very few people are discussing and going into those depths. Most of the people are only after the strategy or just the surface area they are scratching, and that's it. So in our podcast, we are going to lots of depths. So that's a very good start, I would say. And right now, I'm mentoring like people into swing trading. So I'm a swing trading specialist, and I focus only on my swing trading. That's what I say. It just like Bruce Lee. If you have to become an expert, you have to master one kick 20,000, thousands of times. Like he says, you have to master it like 10,000 times instead of mastering 10 kicks 1,000 of times. So simple. You have to become an expert in one field, and that is the fastest way to become a profitable trader.
Yeah, absolutely. Absolute truth. That is why they call doctors as specialists. You can't have a cardiac surgeon doing a neurosurgery, right? Yeah. So it is similar to that. And in trading also, it applies as just like that. So we need to find what suits us. And I think we should all specialize what suits us. So that gives us the real edge in whatever we are doing. So thank you so much and welcome to the show. And for the audience, my name is Kiran Prabhu and I'm the founder of AASK Traders Hub. And the intention of AASK Traders Hub, or the single point goal, is to ensure that every community member gets to master this basic life skill of how to manage our own money in a very simple, structured way so that they can apply these learnings and take control of their finances. So that is what AASK Traders Hub intends to do. And I'm so happy that we have such nice collaboration from people in the industry and who have the same kind of a thought process. And I think we are all doing a decent enough job to educate people and in the right way. That's what I meant. Educating people in the right way is important. So that is what we are trying to do here. And to continue that is where Beyond the Trade podcast comes in, wherein every episode, what we do, we try to go and address certain basic, simple things which actually are very important for any serious person to understand. So that is what we try to do. And we are going to have another amazing session today. So as I said, we are talking about, see, all of us are into full-time trading. We trade and, we invest and all that. So we have our own systems of how we decide on spotting the opportunity. And when we find an opportunity, how do we enter? And once we enter, how do we manage the position? How do we put a stop loss? How do we take an exit? So these are all the steps of any particular trade. So what is very interesting about today's episode is all our audience will get 3 different perspectives. Because let me tell the audience also, we have, all the 3 of us have never discussed our approach or what we do. Okay, so for all the 3 of us, we don't know each other's style in detail. We know only, okay, I know Arun is a swing trader. I know Divakar sir is into the index and all that, but we don't know the details. We are not making it up for the audience. I'm telling you, we have never discussed about we have never gone into the details of our system, and we are doing it for the first time. More than the audience, I feel privileged that, I'll be getting to know the details of what Divakar sir approach is, what Arun's approach is, and of course, I will be very glad to share what my approach is and how I do it. So it is going to be a very interesting session. So stay with us till the end, and you will definitely enjoy this episode. So with that, let us start today's session. The agenda for us is, what we are going to do is, okay, right now, the first segment of the thing is, we are trying to, since we are talking about this, what I would like to ask, we'll start with Arun this time. Okay. So
for a change.
For a change. Yes. So what we do is, like for example, since we are talking about how we manage our positions and all, let us start with a recent anything, any trade or anything which comes to your mind, which made you take that opportunity. So anything like that, or basically we would like to understand, okay, how do you identify opportunities?
So how I identify a trade is like I have a process. So I have a step-by-step process, daily process that I go through. So that's what I call is that now I have created a procedural memory for that. What people don't understand, like every trader's procedural memory is different. Like I have created a specific procedural memory for my swing trading. So what I do, so I have a clear plan. Number 1, I do my market analysis. First thing, I understand what the market is doing, whether it is favorable on the long side, whether on the short side, or it is in a sideways zone or whatever. So I know. Then the second thing is, if it says like whatever the trend side is, then I go and run my scan on that side only. If I want to go long, then I will run my long scan. If I have to go short, I will run my short scan. Then I am a pattern based trader. So then I identify my pattern. When I get the stocks in my scan, I'm not randomly taking any trade just if it comes in my scan. It's not like that. So I'm a pattern based trader. So I identify my pattern, and from there, then I enter, then which I like, I will identify 2-3 trades which I have to select, which I identify as a good patterns. And then I enter, then I put my stop loss, then everything is fixed. Like position sizing is fixed, my stop loss is fixed, my then how my trade management will go. So that is all part of my procedural memory now. So what is procedural memory is? Procedural memory is just like your car driving. So now you don't go to daily car driving and you think like today I will now put the key into it. Now I will start the car. Now I will put first gear. No, it automatically happens. So once you become experienced in something, so you automatically do. You just go, you just sit, you just put the key, you start, you first gear, second gear, third gear. You are not thinking. That's how your trading should be. So now so everyone who is a trader, that is why it takes time. What people don't understand is you cannot develop a procedural memory of one person to another person just like that. You cannot copy that. It takes time. So he has taken a lot of time by taking the same trades, doing the same process. So now this swing trading process that I do, so that is very specific to my swing trading. So I am a short-term swing trader. I only trade for 2 to 6 days or 6 to 15% moves. That's it. So it's or, not and. So either I will hold the trade for 2 to 6 days or 6 to 15%. Whichever I get first, I take it and I run. I move to the next trade, next trade. So this is how my procedural memory has built now. And that's what I do. So my steps are fixed, like car driving. If I'm driving on a highway, I will drive fast. So when the trend is on my side, I take more trades. When the trend is not, like when I go to some area where there is a lot of traffic and all, so we drive slow. That's how the market is. So when the market is not that much working in our favor, we do less number of trades. We put less position sizing. So that's how the game is for me.
Absolutely, it's fantastic. I like the thing about this. It is like going into an autopilot.
Yeah, that is what procedural memory is.
Yeah, exactly. So it helps in it helps in a lot of things. It helps in keeping the emotions under check. It helps us from overdoing things. It helps us, and it's a good way. I feel. I mean, fantastic. I mean, I really like the approach, and it really shows how much you have put into come to this stage wherein it has become autopilot. Because if you remember, even to ride a cycle, we used to initially, without any support, we used to fall.
Yeah.
But after a certain time, we can go and do, if the road is proper and all that, we can even do wheelies. So
Yeah.
that is what it means.
It is just like walking also. You just see, like a child. A child cannot walk. Like I have a 2-year-old daughter. So when she started walking when she was around 1 year old, so it took her a lot of effort. Like even we were surprised. It took a lot of months and effort, and we used to put, and then only she started learning walking. But now we don't think now that I have to go left. So which leg will I put? Will I put left leg, right leg? No, automatically it happens. Now we are walking. Just like that. We never remember that we also started learning walking at some stage. So that is what the procedural memory is.
Absolutely, absolutely. Thanks, Arun. Thanks for those insights. It was really great. So, Divakar sir, how is that you identify your opportunities?
Yeah, actually, Arun presented really well. The procedure memory is definitely is the topic of the day. I think one should agree. See, if a trader can reach that state, then he has become a good trader. Absolutely. So you talked about walking and cycling, and I will add swimming to that. Swimming being my favorite passion. So once you learn swimming, you will never forget it. No matter how many years you have not practiced it, the minute you jump into the swimming pool again, you will start swimming. So that is the procedure memory. Well, it takes a lot of years, of course, in trading to reach that state. Because of the complexity involved. The reason is in a trade, the objective is only to buy and sell. There are only two options, but the number of styles or strategies or methods involved are in hundreds and thousands. That is where a fresher trader gets confused and keeps on changing that. Before he could expertise on one thing, he would have moved to the another one. So that is where it takes time and failures, and he will struggle. I also went through that. That's what I'm trying to tell you. In the last 10 years or so, I took almost 6 years to get to one kind of a successful stage. So I have tried all kinds of trades, whether buying the naked calls or puts, trading futures, trading stock futures, and in that strategies like selling, bank nifty selling. So I have tried in seasons, everything. And by the time I see success, I would have moved on to the other one. Okay. So over time, yes, I started realizing slowly, this is how the market works. Once you get that breathing technique of understanding the market, if you go with that breathing, and then nothing stops you. Here and there are small mistakes, but absolutely no problem at all. Also, see, I like stock market. That's what people should do. You should like, not because it's going to give you some money. You should like your profession the way we should like our stock market also. See, I like stock market basically because there is no competition here. You know what? if you start a retail store, a business, or you start an industry, definitely there is a competition. In fact, if you're a trader, tell me, where is the competition? You are going to compete only with yourself.
Correct. Correct.
It's amazing. You know, there you can do whatever you want. Nobody's going to come and stop you. Absolutely no competition. And if you compare with driving, it's like, you know, you're driving on the VIP lane. You know, no struggles, no red signals, nothing. The lane is fixed for you. You can drive as long as you want. So that's the advantage I saw in stock market, and I'm loving it now. And you know, that's what people, if they find a style by themselves, and they can be definitely successful in getting into that. Now, if you're going to ask me my style of trading,
Correct.
yeah. So here, I go with the kind of a market, how it's behaving. Based on that, I take trades. Okay. For example, I'm into index trading, basically. And doesn't mean that I'm not into stocks. So I'm also into stock trading. And I am into short term and long term. So if you classify right now, 4 kinds of trades is going with me right now. In index, I'm doing short term and long term. And in stocks also, I'm doing short term and long term. So I mean, just with the flow I'm going, and it's really, you know, it's working well with me. So how much time you give me, Kiran? Based on that, I'll try to explain on things.
Yes. So, sir, in the next section, I think we will go into the detail, and then maybe you can explain your trade and all that.
Okay.
So, in fact, I like the point that, you know, that point when you said that, you know, we should love whatever we are doing, because I think that is the only way wherein we will not feel overwhelmed and stressed. So, and especially if you are into a challenging profession like trading and investing, then, you know, this is an absolute essential.
Exactly.
So I can tell all our audiences, you know, all the 3 of us, I can tell you, you know, with conviction that, you know, we have fallen in love with the financial markets in different ways, but we are in love.
Yeah. Totally agreed.
So, you cannot succeed now without passion. You cannot succeed in market. That is the most important thing I find.
Right.
Absolutely. Absolutely. So nice, sir. Thank you so much for sharing that. And coming to my this one, what I would like to share is, see, I'm similar to what Divakar sir shared. I basically also trade in the index, but I am more into option selling. I don't do option buying. I do option selling. So that is for my short-term trades. I do only trade the index and option selling. But I also do for my long-term investments, of course, I do it with the stocks. And I also sometimes, when I find an opportunity, I also trade the stocks on an intraday basis. So that is what I do. And my approach or my identification is very simple. I use a combination of the 20 and the 200-day moving average. And actually, I follow the price action basics to decide on my entry points, and based on my entry and whatever is the stop loss. So based on that, I always have a minimum 1:2 risk reward. So any trade which is falling into that category, that is my point of decision, whether I should enter or not. So 1:2 is my yardstick, and second yardstick is the price action basics. Okay, so basically I will explain it in the due course of this one, what exactly I mean by that. And my entries are normally in 5 zones, which are either near the 20-day 200, or near something called as a CPR, or the previous day high and the previous day low. So these are the 5 areas my entries will be. Why? Because I have not that I feel, I have seen it time and again, that when I do those entries near those places, my stop losses are very small and my targets are very large. So that is why I do that. So my entries are near these very important levels. Basically, they are support and resistance levels. So nothing too complex about it. It's very simple. So that is the way I follow it. And it has been giving me fantastic results over the years. So I just don't like to tinker with it. I go with I'm happy with my this one, and I just go with that. So one more thing what I would like to share with all our audience is this: as Divakar sir and Arun pointed out, there are so many ways to do the trades, but we should find what suits us, what suits our personality, what suits our risk appetite, what we have, what is the goal we want to achieve. So based on that, we should be looking at the method what we are going to adopt. So there is nothing right, that is nothing wrong with anything what everyone does. So please don't feel that उसको मालूम है मुझे मालूम नहीं है, वो कुछ कर रहा है जो मुझे मालूम नहीं है, इसके लिए उसको रिजल्ट मिल रहा है, ऐसा कुछ नहीं होता है. And I mean, Divakar sir, that one point when you said that there is no competition in this business, the competition is against us. Okay, what all that we have to do. I mean, this is a very, what you can say, a very strong message what Divakar sir gave us. I mean, I don't know how many of you realize what he said is this: all you have to do to succeed in this business is just keep on improving. You need to be a better version of what you were yesterday. That's it. And then the sky is the limit.
Yeah.
So thank you, Divakar sir. I was actually, I felt so inspired. When you said that, oh yes, there is no competition. Competition is me. Nobody else.
Yeah.
I can take the position the way I want. The position says I can decide, okay, this is my target, and I can scale it up, when I know that it's the right thing. Even Arun's explanation, when you are on the highway, you will not be definitely going at 60 kilometers. We will be on our top gear.
Yep.
And of course, when it is, bumper to bumper traffic, you have to go slow. And as Arun rightly said, when the opportunities and the market structure is not good, we stay away. It's not only Arun, all of us, I can tell you.
Yeah.
So fantastic. So that is why I, like having Arun and Divakar on this show.
Okay. Great.
So we will move on to the second section, wherein the section's name is What's on Your Plate. So in this section, what we will do is, we will talk about any particular trade or any particular opportunity which we took, and which we are right now, we are doing, maybe in the recent past or something like that. And we will try and share it with our audience so that they can actually understand how we take a trade, manage our trade and all that. So with this, we will go to this. So what's on our plate? So Arun sir, Divakar sir, what is on your plate right now?
Actually, it's a big meal. If you're asking me, my plate is full.
So you can share your most favorite dish,
Okay.
or the favorite trade.
Yeah. Okay. See, currently I'm into index long term and index short term, and cash long term and cash short term. And also on the fifth, there are other trades which I don't want to discuss today. Okay, I'll keep it for some other day.
Yeah, because we don't want to confuse people. I mean, they shouldn't get the message that, I can do everything.
Yeah. So these are the four trades which I'm doing. Among this also, the index long term is slightly complex. See, for the viewers who are actually watching this, perhaps it will become too much. I'll go very briefly onto that. So if I'm taking a futures trade, I'm going to hold that for really a couple of months. So that is nothing but a long-term trade. But how we do that and what are the things we should take care, and on the ups and downs, how you're able to hold it, it's slightly complex. So once you are able to understand the short-term index trading, then it becomes easier to understand the long-term also. So I'll straight away jump onto the short-term index trading.
Absolutely.
Okay.
Yeah.
So on the short term, actually, what I do is I follow the basic, super trend and some moving averages. I also use Bollinger Band. Okay. So based on this, I take a view on the trend movement. Once from the trend change happens, that is where I take a trade. From downwards to upwards or upwards to downward, that is where I take a trade. And then for exit, what I do is generally I follow the RSI. On the RSI and the MACD, these are the two indicators which I use. I see some kind of a depressing thing going on in those two. Then I exit from the trade. Yeah. Okay, more or less, when the depressing act comes, that shows the trend is definitely going to change. So I exit and wait for opposite trade and take there. And these things happen generally from 1 day to 3 days or max 5 days. The short-term trade which I talk about, generally from 1 day to 2-3 day. Max is 5 days. I've not seen any trend getting changed, going more than 5 days so far. So it really works really well. Maybe I can use my chart and show you a few things how I'm doing.
Yeah,
Can I
please,
share
sir.
my?
Yeah, you can.
Yeah, I'm gonna. Can you see my chart?
Yes, we can.
Yes.
We can.
Okay. So this is Nifty 50, where you can see I'm having the RSI indicator on the downside here, as well as the MACD. And you can also see the Bollinger Bandwidth. See, Bollinger Bandwidth is again a very good one indicator which shows where the contraction is happening. You know, the contraction indicates the consolidation of market, and that is where the trend reversal is going to happen. So if you follow carefully, and this is where the trade change is going to happen. Okay, if Bollinger Band gets narrowed down, that shows clearly there's going to be a trending movement. So if you look at on the 5-minute candle here, there is a narrow, the Bollinger Band has narrowed so much here. And that means there is a consolidation. You can expect some big move coming up. You can see all of a sudden there is a big move opening up. It can be any one of the sides, but you can be prepared for that. Generally, on an intraday perspective, a 15-minute and a 5-minute work really work well on the Bollinger Band. Okay. And once on the 1 hour candle, see, once you start seeing the 5-minute and the 15-minute, for the intraday perspective, it is okay. But for the short term, which I'm talking about 1 day or 3 day or 5 day, I go with the 1 hour candle most of the time. Okay. So on the 1 hour candle, if you see here, one is the super trend. Okay. And the Bollinger Band. So this is where the trend started changing. You can see that.
Correct.
See, what we are, sorry?
Yeah, correct, sir. Correct.
What we are seeing is a market where we are going through right now. A very, very short trading range, 300 points. So if I'm showing this screen as of today, in the last couple of days, this is how the trend is. It's not given much of movement. Once it opens here, it has actually, these screens are hiding the points from me. The right side screen.
Yeah, but we can see the levels marked on the right hand side.
Okay.
It is 23010 is the first support, and 23509 is the next resistance.
Yeah, this is 23,000.
That is 23,859.
Okay, 23,859 to
24,171.
Yeah. So almost you can see 300-point rally happened here. Okay.
Yeah.
And once you take a trade looking at the 1 hour candle, you should be looking watch out at the 30-minute and the 15-minute for exit. See, you can follow the same trend, but what will happen most of the time in the market conditions, the entry and exit also sometimes will be the same. If you take here and don't exit here, you'll come back and exit on the same position.
Yeah, it will be break even.
Break even. So to avoid that, what I do is I go with the 30-minute and the 15-minute together. So if you watch here, see, I'm sorry, the screen.
No problem, sir. We will guide you. I can understand. So
See, it's
yes.
on the 1st of January, 3:15, right?
Yes, yes.
Okay. And the exit supposed to be on the
2nd of Jan.
2/15.
Yeah.
So what we'll do is we'll go with the 30-minute.
So you have to go to the left. It was 1st of Jan, no?
1st of Jan, I have to go to the left, right?
Yes,
Yeah.
yes, yes, yes.
Okay.
Yeah, there it is. Yes.
We exited on the 2nd January at
This is 3rd January. Now you're
no, 2nd January. 2nd January is where we exited, right?
Correct,
Yeah.
correct. Yes.
On the high move. So you can see here on the 245, the super trend and the Bollinger Band indicator is showing already there is a sign of weakness here. Okay.
Correct, correct.
And see, the MACD is again one very, very important indicator. The crossover suggests a very long-term analysis. If you see here, the crossover has happened.
Correct.
Okay. And that gives in advance. So you can see here on the super trend, once it breaks down, that's it. You have to exit from here.
Correct.
And
MACD
what I
gave
do for a short term,
before only.
yeah. What I do for short term is to go with at least minimum with 2 lots. If you're going with 5 or 10 lots or 20 lots, that's fine. The idea is you should exit with 50% of your lots, at least with, 100-point kind of a target. Many times, it comes back and you should not see the profit on the board and lose the opportunity of, booking that. Once you book with the 1 lot or the 50% of the lots, even if the market reverses, you are definitely left with a good profit.
Absolutely, absolutely.
Okay, so this is the index trading style on my short term. And on the index trading, what I do is when I enter, I will not take any hedging. But on the end of the day, if it's on a profit side, and if I'm not planning to exit and carry on to the next day, then I will hedge. Usually I buy the ATM put. Okay.
Okay.
And that will come as an expenditure, of course, but that will definitely protect on the unforeseen events on the next day opening time. If the trade is going opposite of your, gap down or gap up of about 200, 300 points, the put will take care at least 60 to 70% of your losses.
Correct.
Suppose if the trade is on your side, then you will exit by 920 or 925. And then again, you should do that in the afternoon session.
Super. Nice.
Okay.
Yeah.
So that's the second thing which I do. Shall I continue with my stocks?
Yes, sir. Definitely.
Okay. So for the entry, I'll show you. I'll take a old example of Oracle here. I follow a weekly chart for identifying stock trading.
Okay.
Okay. So you can see the consolidation which I talked about on the Bollinger Band.
Yeah.
This Oracle stock for many months, it was on a very smaller range. Okay. And it gives a hint it's going to break in one of the sides. But if you know the company fundamentally strong, and for us, IT is definitely a favored place. So I knew Oracle earlier, and because Oracle is going to perform better, so we had that plus point. And keep it in your watch list. And this has taken a long time. You can see months. It's not like I was watching from here, but you get a chance, you watch it and leave it. on a particular day, it has exploded all the way. 1 week, big green candle.
Yeah.
You don't need to look anything at all after that. See, this comes with the volume also. You can see here,
Correct.
the volume, the
Yeah.
kind of a volume built up on this particular week.
The
Whether
highest volume on chart. Yeah.
So just blindly you can go ahead, buy here also, or you can perhaps wait for a dip and buy, absolutely no issues. Then you can see how it has rallied. After that, it has never seen its back. See, from here, the price is 4,000.
287.
Yeah, 4,287. And all the way, it has made a high of 11,000 to 12,000 kind of a thing.
12,900.
See, from the breakout level, it's hardly taken 1 year. So once you are running in this profit, you can ask me questions, it's come down by say 5% or 10%. Were you not, getting, thing anxious that, should exit or not?
Jittery.
See, again, you check here, it is not broken the super trend here. Okay.
Correct.
But it broke the MACD.
Yeah.
So this comes in advance. Actually, it's not like an immediate effect. The MACD usually gives you advance notification. So it broke. So I will be cautious unless it breaks down the moving average as well as the super trend, which you're seeing. I don't need to bother. So I'll continue. And again, it rallied all the way. So finally, along with Nifty breaking down in the last, couple of weeks or whatever, the first time it's broke on the super trend now.
Yeah.
So this is a classic cult of breaking out a stock. I can show you many stocks like this, but this is a classic example of how a stock can break out. And you can also see for exit the 1 day pattern and again re-enter. How I talked about 1 hour for short-term entry and exit 30 minute or 15 minute. For entry, I look at 4 weekly chart. For exit, you can look at 1 day chart. See, if it's breaking down on the 1 day, you can exit and again look for re-entry on the 1 day chart that time, not the weekly.
Correct.
You got my point?
Yes.
Yeah.
So you have to go with the fundamentals of stock also. It's not just the chart, you need to rely on. There are plenty of stocks which just rally for some speculation, and you may get up in getting trapped in that. So fundamentally, looking at a stock is also very, very important. So what I generally do is I'll not complicate too much of things. Earlier, I used to do a lot research on the fundamentals also, but I have minimized. I look at the P. See, price to earning ratio is very important. So for each sector or stock, you have a point where, it should not go beyond that. So it will give you the overvaluation comfortably. And look for sales. Always look for sales. Every year, the stock should be increasing. No matter what. Don't pick up a stock just because it's your favorite stock. Do not mix emotion while choosing a stock. Okay. So if the stock is not giving you, personally, I look for double-digit improvement in sales, like 10% and above should be the increase in sales year on year in every stock. Okay. Similarly, on the profits also. If the profit is also on the double digit, sales is also on the double digit, year on year, look for at least for the last 3 to 5 years minimum consistency, then follow the stock, pick up a stock. I will promise you nothing will go wrong.
Absolutely. Definitely.
Okay. This is one example of, breaking out. So if you're asking me, sir, how will I always look for this kind of a breaking out stocks, not for normal days? Yes, you need to do a lot of research for that. And I will anyway let you know how to do that also. This is one more example, a trend, how you can see the stock from 1,200, 300 level, you can see how it has rallied all the way to making high of 7,300.
8,000
8,000 level.
Yeah.
until recently, it's in the last couple of weeks, it's broken down on the day chart also. So exit has happened, and definitely there'll be a re-entry very soon. So this stock now, if you've not had a chance in joining the breakout, please keep it in your watch list.
Yeah.
And you will get an opportunity to re-enter very soon. I'm telling you now. And this stock from here again, it's going to rally all the way up. I'll promise you that it's going to rally all the way up. So you can see perhaps somewhere here I'm expecting the support area plus or minus here, and wait for maybe another 1 week max. Let the green candle be visible one more.
Yes.
And look for a day breakout on the channel. See, right now it's going down like this. You will see a good big green candle here. Here you can see a couple of them than the weekly, and that gives a confirmation that the stock has taken a good support and ready for one more rally. Just buy it and keep it. It will rally again.
Super.
And one more stock.
Yeah, sure. Yes, sir.
These are all the position stocks which I'm enjoying for quite long some. And on the current trend where the market is down by 10% or 3,000 points, and you're seeing all the big boys stocks down by 20-25%, right?
Yes.
So even now in this kind of a trend, you will see stocks like this breaking out. So this is a Quebec stop. You can see here the stock after consolidation breaking here and rallying. And then from here, of course, there was consolidation. There was a range built up here. And so you can see this is the support area. And again, it was bouncing back support area. Now from this support area last week, in spite of the market downtrend, you can see the kind of upward move now. So you can see the volume also built up. MACD crossover also has happened here. Fantastic stock again to buy. And if this breaks this super trend now, I don't know how much, maybe another 10% or 20% is left. So there are always stocks in whatever market conditions you can screen and identify. And of course, there are easy methods involved in the modern area to identify stocks. So you have to put a little bit effort in identifying, that's all. So once you have it, you can rally on this. On the last part, that is the short-term stocks which I talked about. What I do is I pick up small caps and mid caps for short term, and look for breakouts, and not necessarily this kind of a long term breakouts or short term breakouts, and enjoy it like the way Arun and you said 6% or so. I look for 10%, and if it's giving me more without any strain, I'll enjoy that. But 10% is the kind of a target I look at. So I'll keep about 10 to 20 stocks with the same capital, same sized capital. So if I'm investing 50,000 or 25,000 on each script, I will ensure I'll have 15 stocks on the same amount, immaterial of the script price. So this will ensure the overall portfolio percentage wise is what I'll be ensured with. You got my point?
Yes. Absolutely.
So this is I do it for short term, and all of these are working really well.
Super. Very. I mean, we learned a lot of things, especially about, the entries and, what is the conviction which tells us, okay, what is going to happen. And the kind of confidence we will have on, on our study when we do it for a longer term, like how you said it for Quebec Stub, that, just wait for it to form a, a green candle, and, so we have that conviction, because see, that is the system what we follow. And,
Right.
and all of us believe in our system. So that, I think, is the whole game changer for all of us.
Yeah.
Absolutely. Thank you so much, sir. And it was great learning about this. And we are really honored that, you shared without holding back anything. So we are so, so grateful to you.
Thank you. Thank you.
Thank you, sir. Thank you. So next we'll move on to Arun. And Arun, sir, if you can stop the screen sharing.
Oh, yeah.
Thank you. So that was Divakar sir sharing his, opening up his chest of treasure.
Yes.
And, it was like amazing. I was like, sitting like one student, eager as to what the teacher is telling and trying to absorb each and every second of what he was saying, because it was so insightful and so much. The whole thing, what I liked about Divakar sir, what he said was everything was backed up by logic. It was not in anywhere in the whole thing, whatever you said, let it be about short term, long term, or whatever, futures or your cash segment, whatever. Nowhere a single ounce of emotion came into the picture.
Yeah.
So that is for me the biggest takeaway from what you shared, sir. So thank you so much, and I'm so happy that you shared this without holding back even a small amount of So the message what is there for all the people who are watching us here is, see, there is nothing called as a secret. Like Divakar said, I had mentioned that time, hidden truths. He said there is no hidden truths.
Yes.
Yeah.
It is, we feel it is hidden truth because we know that is the truth.
Yeah.
So absolutely, I simply loved it. So thank you so much, sir. And now it's our Arun's opportunity to share his what's on his plate now.
Thank you, Divakar sir, for sharing. And this positional trading, like he mentioned, how he trades the stocks and all these things, how he has built his conviction. Again, it also shows his procedural memory and his conviction. Like I cannot trade based on these indicators. So he is trading because he has built his conviction. So he has clear rules, like how he will exit the trade, how on which basis his entry. Like he told, he will not exit on MACD. So MACD is only a initial signal. So then he will still wait for closing below that super trend and moving average. So he has all his rules. So that's how your mind should work. So he has his role, and so MACD tells him that you become alert now. So anytime you get a signal from another indicator, and you have to exit. Correct. Then you cannot take your call. No, this time it will again go up, and then you hold on to the stock. That's not how the game is. So you have to follow whatever you process. You have to stick to it.
Right. Yeah.
You cannot bypass the process.
Perfect.
Yeah. So I have a process. So what my whole system is based on two fundamental truths that I follow. What are those fundamental truths is, again, because I have studied charts, like thousands of stock charts. So there I learned that all the stock, so 90% of the stock moves are happening in the market in 2 to 6 days or 6 to 15% move. Okay. So 2 to 6 days, like Divakar sir also mentioned. Why? So there is some reason. He mentioned, either I will hold the position for 1 day, 3 days, max for 5 days. So any trader, if you find out, they will know that whenever a stock moves, that I call momentum instead of a trend. So short form of short trend is momentum. Only the language is changed, but this meaning
remains the same.
So I call myself a momentum trader. So what I feel, so what I not feel, what I found out on charts, that's what I say. Don't study books and all these videos you watch and then you study strategy. You can only get an idea, but you have to put the effort on the charts. That is where I call the effort. Effort is not in only in watching the videos and reading books and all those things. You have to put effort on the charts. So when you put effort on the charts, you will find that the 90%, and I am a specialist in stocks, and that too for swing trading, like only trade based on daily chart. I don't see weekly chart. I don't see intraday charts. I have nothing. So my fundamental truth that I found out, whenever a stock moves, it moves in momentum of 2 to 6 days or 6 to 15%. So this is the whole fundamental. My entry comes within this period. My exit also comes within this period. I cannot, like Divakar sir mentioned. So he has indicator for telling him to exit. So I have this in days rule. So days or percentage, whichever comes first, I will exit. Because I have seen that there is 80 to 90% probability. Again, whoever looks for certainty in market, he can never make money from the market. So stock market, that's what I always say. So stock market is a game of probability, not certainty. So when you study the charts, you will find that 80 to 90% of the stocks are making a move of 2 to 6 days, and then either they will pause or it will fall down, or it can go sideways for the next 10 days, 20 days and all. So what I'm trying to do is, I am trying to do efficient deployment of my capital. So I only hold enter the trade and hold it for 2 to 6 days or 6 to 15%, and then I exit and move on to the next trade. So that is what I have found out. So I'm following my fundamental truths that I found out, and it is not about Indian market or anything. It's how like I'm mentoring people from US market also. So it's not like that. It works on US market, it works in Indian market, it works in Chinese market, whatever world market you see, because this is the fundamental nature of stocks.
Correct.
So I'm only talking about stocks, not about indexes and all. I'm not specialist, neither I have backtested on all those other things. But stocks I have backtested. Anywhere the world market where there is trading, the stocks move in this. Maybe the percentage might be different. Like in US, since there are no circuits and all those things, so the stock moves further. They can move to 20%, 30% also. If you go to, like in India also, if you go to small caps, the percentage might be like 6 to 20%. That's it. In large caps, it's like mostly I trade large caps. So large caps, it's 6 to 15%. Small caps, it can be 20%. In US, it might be 25, 30%. But the days will not change. Days are same. The stock behaves in 2 to 6 days, or the percentage will be like in India. So I am a trading Indian market. It is 6 to 15%. So let's go to one of my trade. Let's go to JK Cement. If Kiran, if you can share.
Yeah, I'm sharing the screen. Can you see my screen now?
Yeah. So JK Cement.
JK Cement, 1 second.
Yeah. I think it was 29th November.
Yeah, 1 second. I think, here's JK Cement. And I will just take off these moving average.
Yeah, so I don't use any indicators. I just use daily chart and without any indicators.
That is why I removed those indicators. Yeah. So Arun, this is a day chart. This is what you want?
Yeah.
Okay. So where shall we go?
29th November.
29th November.
Yeah. So this is the day. So you can say, like, what I use is, so I have certain kinds of patterns also. It's not like that I'm just trading based on like any day I will enter. It's not like that. So I enter based on certain kind of patterns. So I identify a pattern and I enter the trade. And then I have my stop loss and all these things. And then the rule remains the same. I will hold the trade for 2 to 6 days or 6 to 15%. So on 29th November, I entered this trade. Okay. So you can say it's a breakout or anything, but for me, I don't believe in any support resistance and all those things. So I entered the trade on this day based on my pattern. Like you can see the stock was coming from a momentum from the downside. Okay. Then there is this 3 to 4 days pause in this. I'm only looking at a very short term, like from the low. If you see 3 to 4 days, the stock went up from the bottom. You can say from whatever 19th it is or whatever is the date. From 19th November till 2021, 3 days it went up. Then there is a 3 days pause for me. And from there is a breakout candle. That big candle came. I call it range expansion candle. Okay. So my definition of range expansion candle is very simple. It should be the bigger candle from the bigger green candle from the last 3-4 candles that we see. So if you can visually, and you should be able to visually see, you don't have to see the percentage and all these things. I don't believe in any complications. I just see if it is a range expansion candle, in comparison to the previous 3-4 candles, and visually I can see that it's a big candle. So I call it a range expansion candle. That's it. So I entered on 29th November in this trade. And then now you see the next day it went up. What percentage, Kiran, it went? I think it went 5-6%. I don't know. After on 30th.
Yeah. So this was the entry, right, Arun?
Yeah. On 29th, I entered the trade.
Yeah.
Yeah, you can even use that tool. Measure tool is there on the top.
Yeah. So this was the entry, right?
Yeah.
So this was approximately 4.8%.
So 5%. So like I told you, so my holding period is either 2 to 6 days or 6 to 15%. So 5. And then next day, again, I held it till the next day. And if you see, it is 8%, it is up. And what was the move percentage on that day? So what I'm talking about, 6 to 15% means whole move, not the gain I'm expecting. It is the whole move. From on what was the move percentage on that 29th? So 8% it moved for the 2 days.
29th?
Yeah, 29th also, I think it's around 3%. 2 point whatever, 2.4%.
2.39%, yes.
So you can see 2.4 and then there is like 8% that. So around 10, 11, 12% it has moved. So I held it for one more day from 29th, 30th, then the next day, 3 days, and then 4th or 5th day, I exited the trade. Why? Because that is my rule. Either the percentage, so percentage I knew that it has already moved like 10, 12%. So 6 to 15%. I don't know whether it will move 6%, 15% or what. But either the days will complete or the percentage happens, I exit the trade. And I exited on this day.
Okay. So somewhere on, I think on
that small red candle or green candle, I don't remember, but whatever. After the 2 days of big candles, there is one small green candle. Then the move started fading. For me, what I tell you, why I call myself a momentum trader. The definition of momentum, even if you Google it, it means that once a thing comes in momentum, it should continue to stay in momentum.
Correct.
So anything which starts giving a pause, that it's signaling that now it has stopped in the momentum is fading. So my momentum, and after observing the charts, I have observed that the stock stays in momentum for 2 to 6 days or 6 to 15%. So anytime I enter a trade, it is not my choice because the momentum, if the stock has to move, it moves like that. So I have studied a lot of winning stocks. So that's what I have built conviction. So whenever I enter a trade, it is not my problem. It is the stock's problem if it is not moving. That is why people are holding on to losers. If the stock is not moving, they will say, no, it will move tomorrow, it will move next day. So I am not like that. My thinking is completely, I believe in reverse psychology, what normal people think. So my psychology is simple. If I am a momentum trader, the stock should continue to move because I have entered on that range expansion bar. And what I tell you, what I do, what is the definition for me of my range expansion bar is, I call it that the range expansion means what is this stock? This is JK Cement. Okay. So mostly I trade futures or like large cap stocks only. So even if you see in JK Cement, look at the market cap of this stock. If it 2.4%, I ask you, Kiran, and even Divakar sir, can we retail traders move JK Cement 2.5% in a day?
No ways.
Can any individual trader, even with I think what I call 50 crore also, even if you put in this stock, you cannot move it.
Arun, this was a very interesting point. Last time, somewhere I had heard about HDFC Bank. Just to move HDFC Bank by 1%, okay, it takes approximately around 3,600 crores.
So now you see, that is what I'm telling. So you cannot even move this 2% with 100 CR capital.
Yeah.
Correct.
So we are all retail traders. So no one can move. So why I'm telling you why I enter only on the range expansion bar is because range expansion bar means that there is some power behind this.
Correct.
No retailer has not entered. Previous 3 to 5 days, it should be a big So I call it by the name, you call them big institution, financial institution, banks, whatever. I call it smart money.
Yeah.
So what I have found out, all the successful traders in the world, whether they use indicator, whether they use with no indicator, whether they do anything, if you want to be a profitable trader, only one thing, retail professional traders I'm talking about, not about institution. They are only doing one thing. They are trying to follow the smart money.
Absolutely.
We cannot create momentum by ourselves. So what I'm trying to do by entering on the range expansion bar is I'm following the big institutions. So
Yeah.
that's it. And now if I ask you a simple question, Kiran, if you are a financial institution and you have entered on this 29th November, so what should happen on the next day? You tell me.
Obviously, there will be hype and all these news channels will all be bombarded. These guys are making up. This is a big move out, breakout and all that. All the retailers will also jump in and,
So,
other people will also jump in. That is why that big candle on the
Further
next
move the
day.
stock up.
Yes.
So the stock will move up because they will call every retail trader and all. Then so then everyone comes. Then on the third day again the stock moves come.
Yes.
And why the move fade on the third, fourth, or fifth day? Because the news come on the second and the third. Because I tell you, most of the thing what happens? First day, smart people enter. Next day, you call like all the follower center, what I call, okay, by reading news or by even looking at the stock and all those things. And the third day, the dumb people enter.
Yeah.
When we tell our friends, okay, now I have bought this stock, you should also bought. I have bought this. This is given a very good breakout. And what do the smart money do on this third day?
They exit.
So this is how the game is played.
Absolutely.
So people, that's why I never read any news. I don't watch any. I haven't even watched even a financial channel since the last 5 years. I don't even know. So because I know if I watch any channel, I will get influenced by them. That this stock is doing good, there is going to break. I don't follow anything. I follow just pure price action. That's it.
Amazing.
So there are two things I do. Either the trade will hit my stop loss next day, or if it has to work, it will work. That's it. Same thing, simple thing. Because if it is a true smart money that has entered, the stock should move up. I cannot move a stock. Why should I hold a stock if it is not moving? I don't keep on holding the trade for next 10 days, 20 days and all. No. So I follow this simple concept. That's how the game is. Like I can show you any move you see, that is how the stocks behave. If it has to move, so I'm not going to make a move. I try to find the zones where smart money has entered. There is a probability. Again, no one can guarantee. There is no certainty that every stock which I trading it should move. So, but the probability is, that is what I found, 70 to 80% probability. If I have entered at the right place, it should move. If it is not moving, it is not my problem. It is the stock's problem. It means, so I have to get out. As simple as that. And anything which is working, I hold it. Like I told you, that's what I found. So it hold for 3 days, 4 days, 5 days maximum. And that's it. I have to get out.
Super. Very nice.
And then, yeah, I want to show one more example. If you can take the stock of IGL.
IGL?
Yeah. Indraprastha Gas Limited. So there are different kind of patterns that I found. Like this is the 2nd December. Yeah, this is the day only that you have got on the bottom. Yeah. So here again, if you see, so this is the candle I entered. This is like December where below it is written. So this is, I think this is the 2nd December. So if you compare it to the previous 4, 5, 6 candles, is this the largest, visually you can see, is this the largest green candle or not?
Yeah.
Yeah, that's it. So I entered on that day. I put my stop loss and I let the trade work. Now you tell me, if this is a smart money entry and the stock, now you can check again. It went for 3, 4, 5 days. That is what the behavior of the stocks is. After 4, 5 days, it has to take a pause, or it will go down, or it will go sideways. I don't know what happens, but after that, and you calculate, it will be around 15, 16. That's
16%.
Yeah.
80 to 90% of the move are happening in this range. That's what I know. So I am playing a high probability zone game.
Super. Nice.
So I enter, I put my stop loss, and I had do my position sizing. Again, I'm not going overboard. I don't like a setup. So I put 100% in this trade. Next trade, I will put 50%. Next trade, I'm putting 25%. That's not what I do. I follow a fixed position sizing. I play with my position sizing. I play with my risk. So I know what I'm putting on the table, what we my risk next day if it doesn't work out. And I accept that risk before taking the trade only.
Super. Nice. In this particular case, Arun, where did you exit it? On which date you remember?
Yeah, maybe on the, like here, I tell you, like first I entered on the 2nd December. What was the percentage? Show me the percentage. I can tell by percentage or by days.
Yeah, from measured from the.
Yeah, so I would have entered on this last candle actually.
So this is the second.
Yeah, entered on this day. Yeah. Then third I held the trade. Fourth also I held, and then I entered here on somewhere on this day. Yeah.
You exited.
I'm not saying, and one thing I tell you, I never exited at the top. I never entered at the bottom. Like someone yesterday I was speaking, so he said, "Sir, do you catch the whole move?" So I said, "I never catch the whole move. I only catch the part of the move. That is what my job is."
Exactly.
I never enter at the bottom. I am I only enter after confirmation. I don't enter before breakout. Sorry, people think, yeah.
No, I know it's the same thing about trying to time the market. No one can time the market.
So I'm not telling that if I exit at this 14, 15, 13%, it will not go up 1-2 days. It can go up. That is what I told you. But
in fact, it went amazing. It was a good move.
Yeah, it went up after that also. It's not my point. I moved to the next trade.
Correct.
Because I am playing the highest probability zone. So I am only playing part of the move, which is the most highest probability. That's it for me. And I move to the next trade. And I move to the next trade.
Yeah, absolutely. I mean, I think that is the best way to effectively utilize the capital.
Yeah.
Rather than
And these type of setups I'm getting, like there are thousands of trades happening. Like this move also, next move also, you see, I don't know this move on which date. Below this 2025, there is a big range expansion bar. So I might enter on that day also, and I can capture again 4-5 days moves and enter. But I have to see my pattern and all. I'm not saying I will enter on any day. So I have a few specifics that what I use, on which day I enter and all, but nothing complicated. Everything I keep it very, very simple. That's what I follow. And I keep it to my plan. And I enter, I put my stop loss, and I take the trade. That's it. And no indicators, nothing. Again, you study. Now, this move also you study. This move from bottom to top. See what is the percentage from that 2025 candle, that big candle that has come up. That it again went up for 4-5 days now.
Yeah.
Just calculate what is the length
from
of this
here,
move. Yeah, from bottom to top, calculate. Any move you calculate. What is the percentage? 13%.
13%.
So again, within 6 to 15%, 90% of the move, whenever the stock moves, it will be moving any stock you pick.
Yeah.
Within
one more thing I would like to put for all our audience. If you would have noticed, see, we are measuring only the body, not the wicks. I would like to tell it to our audience. I'm very sure Arun also looks at the same way. And Divakar sir, I think you also look at the same way, right?
Sure.
So all of us, we always look at the body, not those wicks. That is why, we are measuring it like that. Super.
So that's what I found out after looking at thousands of charts, that the stocks like this one also on the left side, if you see, there is 4-day move, calculate the move percentage. It will be within 6 to 15%. Any move you pick. Anytime a stock comes in momentum, it will move like 2 to 6 days or 6 to 15%.
From here, Arun?
No, on the left side, on the left side of the page, right on the left.
Which day?
On the start, where? Yeah. This move.
This one?
Calculate it from. So again, 2 to 6 days it remains, and 6, like you see, 6 to 15%. Within that range, either the days or the percentage happens, and then you have to exit. Because that is how the nature of the stocks is. That's how they are moving. So you have to exit.
Around, actually, this gives definitely, very astonishing thing for guys like me who use indicators and different concept and news and everything. And you don't switch on to news and not even any indicators on a blank chart like this and be successful. Amazing. And also it shows the confirmation of different concepts can be there. Each trader can adopt his own style and be successful. It's hats off to you. Good.
Nice. Superb.
Thank you, sir. Thank you. Yeah, that's how, because every trader I feel that is why trading is so interesting. That's why I feel stock market is, every trader you go through, he will go through his own concepts. So he has built his conviction on his own concepts. That's what the
Correct.
game is all about.
Absolutely. Absolutely. Okay. You have any other stock, Arun, to discuss or?
No, that's it. That's it.
Okay. So in that case, I'll stop. And yes, you can continue speaking. I wanted all of us on the screen, so you can continue.
So yeah, that's how my system is actually. I keep it very, very simple. So I have a scanner for identifying these range expansion bars. I do everything I do is, first thing is, like I told you. So I have a procedural memory. So everything I do is pre-planned. You can only have procedural memory that you are doing pre-planned. Not every day I'm coming and randomly I will see I'm doing some random things. I will choose them. No, I have to do the same thing again and again and again. Just like a professional sports. It's not like that Virat Kohli, one day he wakes up, he will become a footballer. Yeah, he will start playing different, like Dhoni. He cannot hit sixes like Dhoni. So Virat Kohli has to play within himself. So that's his game. So everyone has their own game. Like you cannot pull like Rohit Sharma. Only Rohit Sharma can pull, like Virat Kohli also cannot hit sixes on pulls like Rohit Sharma does. So everyone has their speciality. So you have to play the game according to your within your own dots, I can say.
Correct. Correct. Well said.
Super. Thank you, Arun. And it was really amazing, especially the conviction part. And as Arun sir said, very clean chart, no confusion, and not following the news. This is something which I also do. I think it has been now 8 years, Arun, that I have not followed news.
Oh,
yes.
One more guy. Very good.
Yeah. So it has been actually not only news, it all started with this, that it has been 8 years since I stopped taking any advice from anyone.
Okay.
So that was how it started, and then it moved. I graduated that, even listening to the news and business channels is actually looking for advice. So that is how it also stopped, and it has been 8 years now. And
Okay.
I cannot tell all of you that is the best thing what anyone can do.
Yeah.
Because the whole point is, unfortunately, today, most of the news is just noise.
Definitely.
And it creates biases in us. So which is,
also they'll be limited to the information, out of 100, they'll be talking, say, about their interested 25% information.
Yeah.
So you're going to miss that 75% best information.
Yeah.
The Cubex stock, nobody talks about it.
Yeah, exactly.
Yeah, so it's like that. There are hundreds of good things which are happening in the market, and you will miss out if you totally believe in them.
I did one small exercise. I just, out of just curiosity, that is how I have learned all my life. I did one instance long back, this was, I think around 6 years back. Yeah. Yeah. So Arun, as I was saying, it's just, very interesting, and, I really like the whole concept and simple things. And thank you so much for sharing that.
Thank you. Thank you.
So great. So with that, I think it's my turn now.
Yeah.
And I will keep it very short because, because whatever both Divakar sir and Arun has shared, although it is not similar to what I do, but the fundamentals remain the same. You will find out in a moment when I share this, because the thing what I want to share is all consistent and people who do real trading. Okay, the fundamentals remain the same. The way they do it might differ, but the way they approach it, the way they look at things, the way they look at charts, the way they take their opportunities, their rules, I can tell you it is almost the same. Okay, so I will just demonstrate it when I show my system. So let me go and share this screen with all of you. I just, had a trade today on one of the stocks. So I'll just share it with all of you. Can you see my screen?
Yeah.
Yeah.
Okay, so it was in Reliance. So I will just show you. since it was on an intraday basis, so yeah, there it is. So since it was an intraday basis, I normally use a 5 minutes chart for that. So this was today's chart. Okay, and in my case, normally what I have is these two things on my chart, which is the 20-day and the 200-day moving average. So today, what happened was, as you can see, there was a slight gap up, and it was kind of doing a kind of a hammer, inverted hammer, or whatever name you give the first candle. But for me, this was not a sign of bullishness. Why? Because the overall trend was downwards, and it was nearing to the 200-day moving average. So for me, any price which is below either the 20 or the 200, for me, it is in a bearish zone. So that is what I go by. So what I did was I entered it at the third candle where I have marked that 1270. That was my entry, and my exit or my stop loss was, right above this candle, this particular candle, somewhere here. Okay, that was the stop loss. So basically around 3 points stop loss.
Look at that.
So I
Can
just
you tell me
followed
the price, please? Price which you entered.
the entry was at 1270.65. That is
Okay.
the candle, the third candle when it broke the green.
Yeah.
That was
The body of the green candle.
Body of the green candle. The horizontal line, what I have marked, this one.
Yeah.
So my concept is this: whenever, see, the whole point is this: since the whole structure of Reliance is in a downtrend, I am always in lookout for a short trade in this, not a long trade.
Okay.
So what I do is a simple thing. Since I am looking for a short trade, I wait for a small green candle to form, and that when that green candle is completely overshadowed by the red candle, for me, that is a confirmation. So that is the place where I take the short, and I normally keep the high of the previous green candle or the immediate high or near the 200. That is my area of stop loss. So in this case, if you see, the stop loss was just 3 points, 3 rupees stop loss. And if I can tell, actually I held it for the whole day. I mean, I just exited it at the last moment. So if you can see, this one, if I can measure in terms of percentage,
It's like 26 points.
Yeah, around 2%.
2%. 26 points.
So that is for the day.
26 points.
Yeah, 26 points. So in this case, since it was approximately just 3 points, so my risk was, I think
it is like 1:9 risk reward.
Yeah. So in this case, I had actually taken a position size of approximately, इसमें 3 था, तो my normal stop loss is approximately in this particular case was 3,000 rupees. So मेरा position size कितना था इसके हिसाब से? Yeah, 1,100 shares or something.
Okay.
So there, the result is there.
Beautiful.
Amazing and fantastic on this.
Yeah.
It really works well.
Yeah. One more thing, what I do is about, on how I manage it. Like, for example, normally what I do is my normal risk to reward ratio is 1:2%. And as soon as the thing starts going in my direction, what I do is I get my step is that I get my stop loss to the not only just the break even, just below that, so that I can cover my costs, so that I don't even end up in any kind of an expense.
Yeah,
that is my first step. If you can see, it was just above the fourth candle high.
Yeah,
that is where I kept my stop loss, and then I just wait for it to do its job. And normally what I do is once it starts going, I start first was from this place I brought it to this place, and then I got it to somewhere here, then I got it to somewhere here or something like that. And after this, I didn't even move, because by this time my 1:2 was already secured. I didn't move the stop loss from 1261. So I just kept it. So I just waited for the day to get over, because normally, since it was an intraday, I cannot carry it to the next day. I have to exit. So I don't exit it at the market price. I always let it hit my trailing stop loss. So that is what I did. So I just had to, I kept on holding, I think somewhere on 320 or something, I just exited. So that is the way I manage and enter my trades. So for me, it is very simple. My approach is, that what I do is, my strategy, if I can tell you, is very simple. All I do is, I identify the first of all, the opportunity. That means whether it is a stock or an index or something. And since I was a little busy, I didn't want to do it in index. And since Reliance was already on a downtrend, and thanks to Arun, have started using the screeners just like him. And I got this from the screener itself, Arun, today. So I was looking for the negative screener, and I got this. And since I always, and as you said, the screener, it is the what you can say, the large cap stocks. So that is what came out, and I just put it on the watch list, and I saw my pattern. I use the screener just to get the stock into my watch list. Nothing else. After that, it is
You
my
have to do
process.
your work.
Yeah, it is my process. So I mean, our process, what we follow, and I just did that, and the result is there. The strategy or the approach what I use is very simple. Is first thing is I identify what is the opportunity, that is either the stock or other things, and then the next step for me is to identify the trend. Once I identify the trend, suppose if it is a downtrend, I look only for short opportunities. If it is an uptrend, I look only for long opportunities, not the other way around. And the entry points are like this, that color change concept. That I always make sure that my stop loss is always small. So I always ensure that I enter near either the 20, 200 or the previous day high, previous day low, those areas. And once that is done, I put it all into the system. I never put any market orders. Everything is put into as the limit orders. And I just, let the system do the work. I can tell you that it has been 3 years now that I have never placed a market order.
Okay.
So it's all limit orders. It's all, as this is the way I think I have, developed my muscle memory now. So the position size calculation, the entry price, and all that comes, pretty easy now for me. So that is how, it has been done. And yes, sir.
Yeah, if you trade index, do you trade on futures or do you trade on options?
No, I do only option selling. So since January onward, since the weekly expiry has gone, now what I do is, with the option selling, what I do is I carry it for multiple days. So earlier I used to only, like, for example, the last, from January to November was actually a very good day. I mean, very good time for me, because every day of the week I had one expiry.
Yeah.
So I used to have, on Monday, mid-cap Nifty, Tuesday Fin Nifty, Wednesday Bank Nifty, Thursday Nifty, and Friday Sensex. So on all these days, I see only that one chart, and I use the same concepts, the same price action rules. So based on that, I used to do the selling, and I'm very happy to say that last 8 months, my accuracy rate has been as high as 94%.
Oh yeah, it becomes.
Yeah. So
especially with option selling, that's what option selling has advantage.
Exactly. Yeah. So option selling gives me that edge also. So it has been great. But since this expiry thing has changed, now the only thing what I've changed is, of course, the last week of the month, I get to do my weekly expiries thing, what I do. And the remaining 3 weeks, it all based on the price action. So I hold I still do option selling, but I hold it for multiple days. I don't exit it in the same day. Okay. And even this I felt is actually this one, because it gives me a, if I take the contract at the beginning of the week or the beginning of the month, the premiums are so high that, if I even give it a 3-4 days time, the kind of theta decay and all that, the kind of returns are amazing, in fact. Yeah. So, although what has happened now is my trade numbers have reduced, but my results are actually, I have to, tabulate it for the, these, I am waiting for January and Feb, because December was when I slightly changed this, but still there, my win ratio was 75%. So that itself was good, but January.
Your cost will be very low now, no? So you have lots of major advantages. Your costs are low, and you are able to hold your trades, and you are capturing big moves. So these will also add up.
Absolutely.
Definitely. See, from smaller trades, we have to move on with our experience to bigger trades.
Correct.
We should not be hooked on to our computers and minute by minute watch on it. That's not definitely good for a long time.
Correct.
If you have become a good trader, that is also a proof that from small trades you've gone to the longer ones. So
Absolutely.
ideally,
Yeah, I mean, it is more of I always get reminded of Arun's thing that we should be adaptable. So
Yeah, that is the only way to survive in the market. That
yeah,
is what you have to keep on
exactly.
adapting. Like I cannot tell that this 2 to 6 days, 6 to 15%, but I know maybe it will go to 3 days. Then I will move to 3 day trader. Maybe these moves might go to 1 day. So then I can even move to one. Well, you have to
Right.
keep on adapting. Like you
Yeah.
said. So the SEBI changed the rules. So you have to also change. You
Yeah.
cannot say it like
So-
I cannot put.
So in fact, my community members were asking me and all that, how is that, how is it going to change and all that. I told them it's nothing. You don't have to worry much. All you have to do is just, settle, because there was a lot of confusion going on as per the lot size, when will be the
Yeah.
expiry and all that. So I said, as I told you, I don't follow any news. So I said, don't worry. Once it comes onto the thing, all I told them was, we will cross the bridge when we come to it.
Yeah, obviously. That's how the game is.
So no need to break your brain and get stressed
Obviously.
and all that. Because see, I know, as Divakar sir already pointed out, there is only three things which can happen. Either it can go up, go down, or being sideways. And I know that, I know what to do when it is upwards, when it is downwards, and when it is sideways. What to do, I know.
That's it.
So why to worry? There is nothing to worry. Chill, relax, and just do what the market is going to do. And I always remember this very funny thing, that the only thing in our control is our entries.
Yeah.
And the other thing what is in our control once we enter is the amount of the risk,
Loss.
the stop loss.
Yeah.
So I take care of I focus completely on my entry, and I decide the risk.
Stop loss, risk reward.
And after that, it has become so autopilot to me now that if I don't find a 1:2 risk reward opportunity, I simply tell that opportunity is not for me. I don't even look at it. So it has become so, what you can say, I'm on that I keep telling to my community members, trading has become like a meditative experience for me.
Right.
Yeah.
So it is actually, in reality, it is actually very simple. Once you get a conviction on your system, it becomes so, what you can say, I am not joking. It is so meditative for me, because I hardly spend 10 to 15 minutes to decide everything and put it into the system. After that, I don't even look at it. So I feel, and I get a lot of time to do a lot of other things. And I know, because I think I have told this to the audience also. Full-time trader doesn't mean that he sits in front of the system from 9:15 to 3:30.
Exactly.
A full-time trader is one who can generate the returns in a most efficient way and in a most consistent way. So according to me, that is what it is. And if the consistency is given by 10 minutes, why not? So I was just sharing on the other days, if I had to really sit from 9:15 to 3:30, why to break my head doing this challenging job of trading? I will just better if I do a 9 to 5 job, no?
Yeah.
So
Definitely.
so that is the thing. And so that is my way of doing things. And amazing. So I think we had a great session, and it has elongated a bit, but I can tell you that, once we go into the details, so this is what comes. So it is like going into the details. You will have to dig deeper to really get the oil. You don't get oil in the surface. You have to go deep. So if you want gold, you have to go deep. So great.
Well said.
Great. And thank you so much, Divakar sir and Arun. So I think we should, conclude by sharing a message in the end for the audience. So Divakar sir, you have anything to share with our audience?
Yeah, Kiran, see, as you said, this long video, if it's finally going to help even few in learning properly and take it from there, that's all what we are looking at. I'll be happy enough to do this on and on. And meanwhile, I also request the viewers to subscribe to my YouTube channel, Bulls and Bear Bulletin, and keep watching. I come out with a lot of useful information and strategies on videos. Also, I go live every day at 9 in the morning, and also once in the afternoon between 1 and 2. So please subscribe to my channel, and yeah.
Sure, definitely. I think, see, the audience, what my request is, see, you might feel that, what are these guys up to? These guys are all in the same field, and, they are, telling each other, you follow me, follow me, follow me. And else, let me tell you, as Divakar sir said, we are the kind of people who don't compete against each other. We are the kind of people who are, we know that, even if there will be hundreds of people doing the same thing, we are still not feeling threatened. Why? Because we know what we are doing, and our intention is very pure, in the sense that we want to share this knowledge, just like our elders used to say, never hold money. Money is supposed to be in circulation, and similarly, never hold your knowledge. Knowledge is supposed to be shared. So we follow this principle. That is why we are doing this, and all of us will be very happy if you can go and choose any one of us, any kind of style, what suits you, and we will be very glad to help you. So thank you, Divakar sir. So Arun, from your side, the message to our audience.
Yeah. So today I wrote one post on LinkedIn, like the difference between amateur and professional traders. If you see like the way we are talking, so that's what I told you. There is a difference between the planning and preparation. So amateur traders do planning. Planning means they are thinking that they can predict the market. So they think that they can predict that this is going to happen, and they plan according to that. Okay, today this should happen, that the Nifty should go up and Nifty should go down. So they are doing all the prediction job. And the professionals do exactly opposite. So if you see what we are talking about it, we see what the market is doing.
Correct.
So every one of us is watching. So we are not doing planning. We are doing preparation. Like we know that the market can do anything. We don't know anything. People think that if you are a profitable trader, then you know what the market is going to do. It's exactly opposite. We prepare. So all the professional traders do preparation. Preparation means we have all kinds of preparation. If the market moves up, then we have a plan. If the market goes down, we have a plan for that. And if the market goes sideways, we have a plan for that. That is what we call preparation. So only three things the market can do. Either it can go up, either it can go down, or sideways. So you plan for all the opportunities. So that's what we call preparation. So that is the difference between amateur and professional. So whatever we are doing, all three of us, if you see, we are doing preparation. So we already have all the market conditions in our plan. Like this is my reposition size, this is my risk management, this is what my plan is. If I find, like Kiran even told that if I find the plan, then only he enter. If he doesn't find 1:2 risk reward, he will not enter. As simple as that. That's what I do. If I don't get my setup, if I don't, it's not like that every day. If we are called a full-time trader, I'm sitting from computer from 9:15 to 3:30. Even I feel the opposite. I find all the professional traders that I have worked with, and I've thought anyone who sits from 9:15 to 3:30, it's very difficult to be profitable. Actually, exactly opposite. All the professional traders are only operating for certain time zone they have given. Even day traders, they operate only in the most volatile market, like in the morning or in the closing or whatever. So I am not a day trader. I only spend like Kiran mentioned, I also spend like 15 to 30 minutes maximum watching the screen. Rest of the day I'm doing my work, and I put my alerts and stop losses in the system. If I get an alert, I move to break even, or I have to trail my profits. That's it. That's what I do most of the time.
Thank you, Arun. So I think it's a very good, great session. So all I want to share from my side is, for all our audience, trading is not about perfection. It is about the process. So that is the most important thing. And the second thing is, master your plan, master your emotions, and if you are able to do these two things, this is going to be a big statement, but I can tell you this with conviction that if you master your plan and you master your emotions, you are on the way to master the market, because mastering the plan and mastering your emotions takes time. So that is why I'm telling you are on the path, because mastering a market takes a lifetime. Divakar sir will definitely agree with me.
Yeah.
So this is the thing. Second thing is, every trade, every investment, whatever you do, whether it is a win or a loss, okay, if you approach it with the right attitude, then it is a step closer for you to become a better trader and an investor. So each trade is a learning. Each trade you should learn, that and learn. And once you learn, you should not repeat the same mistakes and repeat the good things what you're doing. So this is the third one. And fourth one is everybody's journey is unique. Don't compare yourself with anyone. Focus on your path, focus on your experience, focus on your, the procedure, process, whatever you set for yourself, and just follow the process. It is as simple as that. It is not that difficult to do. It is very simple. So this is my concluding remarks for our audience. And we will be coming up with more such wonderful, insightful sessions. And I really wish that, all of you will go and watch our content, like it, share it with your friends, like-minded friends. Please comment on our videos so that we get to know what is that you are wanting us to do. Please comment what do you want us to do in the next episodes. It will give us some ideas. So please do all that. And you can do it on any of the channels. Bulls and Bears Bulletin, and Swing Trading Mentor, and Ask Traders Hub. So these are the 3 channels. All our links are there in all the description on all the channels. So you can find us anywhere you want. So there is no harm. Anywhere you go, you come to me or you go to Divakar sir or Arun, it is the same. So, but you will get to learn different things. That is for sure. So great. I had a very great session. Thank you so much. Thank you so much, Divakar sir, and thank you, Arun.
Kiran, I just want to add one thing. Like you mentioned, I have only 2 quotes in my room. Number 1, trust the process, like you mentioned. And number 2, that is on the top. It says, trust your plan, not your emotion. So only 2 quotes I have in my old trading room. That's it. I follow on these 2 things.
Absolutely. And I think that is the message for all of our viewers. So anybody who wants to take it up seriously, these are only simple things you need to follow. And we will keep coming with more such insights for all of you. And thank you so much for being with us for such a long video. And I really, thank Arun and Divakar sir. And we will keep coming back and creating such wonderful, amazing conversations for all of you. Thank you so much.
Thanks, Arun, for giving the opportunity.
Good evening and see you.
Thanks all the viewers. Yeah.
Bye.
Bye. Good evening.